Stephanie, thank you. Can you guys hear me okay?
Yes, we can
I
hear
hope
you.
so. Stephanie, thank you. Brought me back to my trading days. So I'd like to introduce our two speakers, Sonia and Faith, and thank you for the earlier introduction on everyone's bio there. So on behalf of IPC, I'm really happy to be here and represent this great topic. So investing with purpose. And why don't we just get started? So I think we hear it a lot, ESG, and so many times, like, what exactly is that? So what is ESG and sustainable and responsible investing? Is it all the same thing? Is it not the same thing? And I'd like to pass it on to Faye to start the conversation.
Hi, good morning, everybody. Happy International Women's Day. Thanks for having me. So there is a lot of terms out there, isn't there? And it can get a little bit confusing. So the way to define, or the way we define ESG, these are environmental, social, governance factors. So when you think about how, oh, sorry, my dog felt the need to start barking at this exact moment. So when you think about how portfolio managers select companies that go into their mutual funds or ETFs, they often look at the financials of the company, right? And assess a company's sustainability in terms of being able to return performance and deliver on the earnings targets that it puts forward. ESG is those non-financial KPIs that may not make their way into the financials. And so they could, if present a very material risk to a company, and hence impact the performance or earnings of a company. So we think of ESG as the building blocks to all things responsible investing and all things sustainable investing. For us, we are using the term sustainable investing. And so my role at Mackenzie is to lead and deliver on sustainable investing across our organization. And so we think about sustainable investing as a way to leverage ESG to either mitigate risk in your investments, or use ESG to actually deliver outcomes or from a mutual fund or ETF. So that's there's four different strategies that we look at. One is responsible investing, which is something we mandate all our portfolio managers to do, which is really using ESG to assess risk. And then on the other end, you have impact investing, where now you're really focused on the outcome in addition to the performance of the fund. I don't know, Sonia, if you have anything to add to that.
So ESG is not necessarily ethical or values-based investing. It's a tool to enhance risk-adjusted returns, a very powerful tool. And I don't think it's long before ESG integration will be considered table stakes, even part of traditional investment analysis. But socially responsible or ethical screening with positive or negative screens is sort of the next level. Negative screens can tend to be values-based, such as tobacco, slave labor, even fossil fuels. Positive screens means purposely investing in companies, moving them in the right direction on an environmental, social, and governance basis. And Fate referred to that. And then engagement is another level altogether of responsible investing. Yet again, it can be hugely effective when we vote our share proxies, for example, according to the United Nations Sustainable Development Goals, or we communicate directly with management to encourage positive change corporately. The influence as shareholders that we can have can far exceed any impact we could have by choosing not to own a company. Impact is the next level yet again, and Mackenzie participates in this, offers it to our clients with the kinds of funds they own, targeting investment choices specifically in support of advancing certain values, climate action or diversity on boards, for example. So responsible investing, it's sort of, there's a core that, environmental, social, and governance integration that applies on all levels. And then there are levels beyond that investors can choose to participate in, depending on what responsible investing might mean to them.
So I understand the importance of ESG. But I'm curious, do you find that it's a more popular topic amongst women? If so, why? Why would that be?
Yeah, it's amazing how true that is and how that feels, especially among my clients. It's so evident. Responsible investing can improve the risk reward equation for investors, and that's fabulous. It makes sense for everybody. But there's more to it. Like, money is power, and with power comes responsibility. And I think that's the key for women. Um, Many women feel responsible not only for themselves. We feel responsible for our children, our wider families, our communities, even our coworkers. So it's not surprising to imagine that women could have a heightened sense of responsibility that extends to even the planet itself and empathy for all people. Um, so, thinking about our investments and the world beyond the footprint of our day-to-day lives seems to come naturally for women more so than maybe for most people. And so, how empowering must it be then when a woman discovers that she can use her own money, her own investment decisions, the power of her own financial wealth to lever, that money to make positive change in the broader world around her? Like, that's an incredibly powerful thing. So I think that's the key. Women are inclined and they're smart, so they're able to make that connection. And as soon as they become aware, they want in.
And I think maybe, Sonia, just to add to that, we do see women as driving this space and this movement. Millennials as well, definitely the younger generation, they're thinking about where's the world going to be in 30, 40, 50 years. And then high net worth individuals as well. This has been,
Yeah.
we're seeing it more in Canada, but I know it's become a trend that's documented in Europe. Where they just, they have the assets and they want to make sure, as they're planning out, their retirement, that their money is being put to good use.
Have you ever, just curious, do you know of any examples or ever seen anything that's ever happened where our investment choices from an ESG standpoint has made a difference, where we've had an impact and companies did have a different direction because of it?
Yeah, that's maybe, Sonia, I could take that, and then please do add. So Sonia touched on this. One of the most important actions or practices that we've implemented across our organization, but also this is a big theme for us in this space, is engagement and proxy voting. So what we call is your active ownership. So considering ourselves as being stewards of capital. So I hold $1 in your company, and that means, I'm going to come to you and I'm going to ask you to overcome risks or make changes that ensure we're building for a sustainable future. In our, we have a women's leadership fund that's currently sub-advised by Impacts and Asset Management. And, more recently they added Amazon, which we hold a lot of Amazon across Mackenzie, across many of our funds and ETFs, but we moved Amazon into that portfolio. And I spent some time with the portfolio managers, say, hey, why did you move them in there? Like, I see they're doing a lot of great things on the climate side. They actually led the Net Zero Alliance for many other these global companies. They're trying to go net zero by 2040, which is awesome. So they're addressing their climate footprint. But on the diversity side, our portfolio manager has been talking to them continuously about adding more women on their board. And by the end of 2020, they had actually added 3 women to the board, which is basically, that's your tilting point, right? 3 women on boards means that now you're going to have a company that's really performing well into the future. So that's a good example of how our engagements have helped to make change. I think the other couple of things I'll refer to is we spend a lot of time collaborating with other asset managers because we think, the more, if we can go in united into a company and make sure that our our assessment of what a risk is and the impact it might have on our investment. We ensure we've got alignment in the industry, then we make more impact. So we more recently joined Climate Action 100, and our team is participating in a number of engagements of Canadian companies. So we go in with, you know, other asset managers and basically lay out an action plan for those companies, and we track as well, and it's making very good progress there. Those are a couple of examples.
It's so interesting what Fate said about women on boards and 3 being one of those magic numbers. I attended an AGM recently, just before the pandemic. I don't know if AGMs are still held in person these days, where 1/3 of the proposed board of directors up for election were women. A coincidence? I don't think so. So at a networking event prior to the AGM vote, I asked a senior executive if the risk of responsible investing oriented institutional managers voting against their slate of board of directors could have been a factor in putting up, you know, so neatly 1/3 women on the board. And he openly admitted, absolutely. He says, we don't need an extra fight. Why fight this one? We're never going to have less than 1/3 women on the board again. I'm like, you know, money is power.
It is interesting.
Shareholder engagement is power. And in terms of understanding what successes companies are having in terms of that shareholder engagement, it's really interesting. There are a number of responsible investment-oriented investment managers who will publish regular engagement reports. And I expect that's something Fate's going to be involved in at McKinsey, I hope. Reporting on the number of engagements they're making, the issues that they're targeting as key environmental, social, and governance considerations that they think they might have some leverage on to influence change from within as shareholders on our behalf, and how they're voting their share proxies, including where they've had successes in the past quarter or the past year, and where they've had failures and given up on a company and sold them out of the portfolio, regardless of what a good investment they may have otherwise been. So money is power, and the evidence is out there as to how we can be powerful with our money if you want to look for it.
Do you think, I often hear this, that products, ESG products are more expensive? And I wonder about that. And we talk about a lot right now. You mentioned a lot about how it's almost there to help mitigate risk. And in doing so, there is a cost associated to that. Any thoughts or suggestions on that?
So Patrizia, I haven't seen any ESG or sustainable funds that are priced higher than their traditional counterparts. I know at McKinsey we price at the category, so we you know, there shouldn't be difference in price. And on the topic of, and maybe just on risk, there's been multiple academic research that's been done that's looked at historic returns over time, and what you find with sustainable solutions is they in fact are less volatile than their counterparts. So you can bet like you're taking on less risk, mainly because you're investing in companies that do think about sustainability, right? So, you know, and that includes good governance, it includes diversity, it includes you're paying attention to human rights, and you know all the things that Sonia touched on. On performance, I just pulled this from Morningstar. They assessed performance in 2020 for all the sustainable solutions that are available to you in the Canadian market. And 73% of those funds outperform their category peers on a risk-adjusted basis after fees. So this notion of, you know, to do something good, I've got to give up performance. I feel like that's so yesterday, and I think we need to get past that. And you know, even the 3+ women on boards, there is performance behind that. Yes, of course we want more women on board because you know what, they bring good innovation, they bring stability, they bring engagement. But women also bring performance, right? So boards that actually do have 3+ women on them outperform those that don't by about earnings per share, about 37.5%. Like so the numbers are there, right? It's a great thing. It's a good thing to do. We're all proud of it, but the performance is also is helping to guide that space and the acceleration in that space.
Yeah. That's so true. I love your term. It is so yesterday, that argument that, and that was something that I would actively talk about with clients 15 years ago and 20 years ago, when you did have to maybe add some extra risk or give up a little bit of return or add an extra fee, and clients still were interested. But for the last decade, that just has not been the case at all. We have so moved on from that point in time. It's not even an argument anymore.
And sorry, Sonia, just to add to that, I think when we initially, this space came to be, it was very much about excluding companies, right? And so I recall talking to my former CIO about this, and he said, oh, you're going to limit the universe for our PMs, right? And that means you're going to lose out on good opportunities. Well, now you mentioned ESG integration. There's so many other approaches that we can lean on that are not necessarily excluding or limiting the universe, that help you to participate in the broader market while pushing forward the right values-based agenda, right? That's helped as well.
Exactly. And there's an important additional consideration when it comes to returns. From an investment advisor's perspective, I see this in my practice every time there's a stock market downturn. I've been an advisor for 31 years, so I have helped my clients live through a few of those, and that's investor behavior. Investors can be their own worst enemies, and selling low and buying high driven by emotion is a thing. And there is so much evidence. Dalbar does a report year after year that just shows the same thing over and over again. Fund return or index return is one thing. Investor return, the participation in enjoying the benefits of that return, is another altogether. We shoot ourselves in the foot every time, driven by investor behavior. So it has been my experience as a wealth advisor through several big stock market downturns that investments that are aligned with a person's values tend to add a layer of extra protection to their experience as an investor. So they're less likely to be sold in a panic than a traditional portfolio. When investments are designed to satisfy values-based objectives, in addition to just somebody's financial needs, which are, the table stakes, the basics, it seems to be easier for an investor to see the bigger, longer-term picture and relate to their investments on a different kind of level of understanding. And they're less likely to panic and sell at the worst moments of temporary trouble, and far more likely to enjoy the long-term benefits of investing. I cannot stress the importance of responsible investing and aligning one's money with one's values in contributing to a positive overall investment experience and being able to enjoy the rate of return that's available for all investors if they can manage their behavior.
If you had to, well, that's the best way to phrase this question. How do I know when I'm looking at a fund or a portfolio, level of ESG involved? Are there different grades? Like how does that work?
Yeah, so that's the tricky part these days. It used to be easy because there were so few choices. But that has changed so much, which is a wonderful thing, but it also makes for a much more fraught landscape for investors to navigate in trying to figure out what responsible investing is. Is this greenwashing? Is this serious responsible investing? Am I going to be investing in slave labor on cocoa plantations or in the Congo and mining for, inputs for my cell phone and for computers? How do we uncover the truth? There's so much information now. So information's a good thing, but there's not a lot of regulation. There's none yet. I think that's coming. So it takes a little bit of work to be a responsible investor. And your advisor can help you with that. I mean, that's my role. In fact, it's become so complex, I've actually hired a responsible investing literacy coordinator to help me engage with my clients and provide and curate content and provide information to help my clients better navigate this question. It's not easy, and mutual fund companies are helping, but you've got to do some critical thinking, you've got to do some research, and it's not necessarily easy to find an advisor who's able to be a partner in helping you do that. A question came in actually to our panel prior to going live, and it was from somebody who wanted to know if we were going to provide any guidance as to how practically to move forward from here, how practically to address the question of how do we invest responsibly? This person had indicated they'd asked their advisor 4 years ago about responsible investing and basically got laughed out of the room. So, that's just not good enough anymore. That's not okay anymore. The information is out there. A really good place to start is with the Responsible Investment Association. Mackenzie's a member, and many investment companies are. Take a look. Does the investment company you're working with have they signed the UN Principles of Responsible Investing? What do they say about the UN Sustainable Development Goals? Do they always vote their proxies? These are the questions I ask every manager I work with before I'm prepared to recommend that manager to a client to invest in. So there are so many tools available now, and a really good place to start is that Responsible Investment Association, including a list of all advisors who have been trained to field these kinds of questions is available on that list.
For sure. Faye, do you have anything to add on that, since Mackenzie's so much involved?
Yeah, I think Sonia's very unique, I would say. I think advisors are still trying to catch up. They just figured out ETFs. Now we're throwing something else at them, right? So it's a new space. And I think IFIC released, some stats that said, only 25% of clients have had their advisors talk to them about responsible or sustainable investing. Meanwhile, like 80+% of clients are interested in understanding more. So when you find someone like Sonia that does understand it, that's rare today, right? And so we're working on, with advisors on training, more broadly to help them have those conversations. But on the, to the point of, how else do you know if it is a responsible investment that you're in and the practices of the company? I would look for the responsible or sustainable investment policy on the asset manager's website. I know we're updating ours, so hopefully there'll be a more client-friendly one available online soon. That's really important because that'll talk to you about all the practices. So you're not talking just about sustainable products, but actual practices like ESG integration and how they vote and how they engage with companies. That's really important. And then the CFA, we're waiting for them to release a set of ESG disclosure standards, which we will abide by, but that should provide much more transparency to investors. But for now, yeah, it's basically you have to do your own research and hope that you have an advisor or find an advisor that can talk to you about this stuff.
And I don't think it's going to be long before advisors catch up to their clients in this regard. I actually get phone calls most weeks from advisors saying, where do I start? My clients are asking me about responsible investing. And so the awareness is growing, and the awareness is the first step. Clients are aware now. It's time for advisors to become aware. And investment companies like Mackenzie and others are helping them become aware and helping make those tools that will help us move in the right direction more readily available. And that's a wonderful thing.
Yeah.
Well, it sounds to me, based on this conversation, that ESG is here to stay. It's not a fad. So I know we're coming up on our time. So I really wanted to say thank you to you both for participating and providing all this wonderful expertise and knowledge to our audience. So thank you so much.
Thank you.
Thank you.
Thanks for having us.
Yeah, I don't think this train is stopping anytime soon.
Agreed. Have a good day.
Have a great
Thanks.
day.